So you probably heard about a little trading pattern called the double bottom. Bottom number one, bottom number two. Now the question is, can order flow help us trade this classic chart pattern with more of an edge? Okay, so now let's go ahead and take a look at step number one. Step number one, we need to identify the double bottom pattern. Now, here's a little pro tip real quick. When we're trying to spot the potential double bottom pattern, we want to look at it on a higher time frame than the time frame that we're trading. For instance, when we start coming over and look at the footprint charts, I'm going to be using a 1 minute time frame chart. However, to spot the double bottom patterns, I'm going to be using a 5 minute candlestick chart. So here we can see right here, as the market came down, we have no idea this has the potential to be a double bottom until we start getting that move right down here. But something we can do just as general practice, measure as we start pushing up above there, go ahead and zone this area out anywhere from the candle wick right up here to the candle body. That way, if the market starts coming back down towards it, we are already prepared for it. Now, something I do want to see with a double bottom pattern, I do want to see a little bit of separation between each of the two lows. Like right here, this would not be a double bottom pattern, whereas like this candle made a low and then the very next candle was right down there. I need to see some separation in between the market making those lows. Now, this same technique can also be applied if we're looking for a double top pattern. We just have to inverse it, because a double top pattern, we'd actually be looking for sell side trades. So now as we come over and look at the order flow footprint chart, notice right down here, here's the highlighted area. This highlighted area goes all the way back. We keep scrolling right over here. This is exactly where we drew it out off of the 5 minute time frame right over in here. If I were to move this area, we'd also see it move right over here on the order flow chart. So we're going to scroll right back here. We had some interaction within this level. Now, as we look at this, is there anything that grabs your attention right off the rip? If you guys have been following along with the order flow videos I've been putting out, there's a couple of clues. However, I'm going to introduce you guys to another clue that I don't talk about all that often. But first, let's take a look at some of the more simplistic approaches. Well, one, as we came down right here, we can see we started to get a positive delta. However, it's not that big of a bullish sign because it was on an up candle. We had 355 delta. The previous down candle was negative 646. You look at the candle before that, negative 608. One of the things I would have loved to have seen is on this down candle where it's negative 646, I would have loved it if the delta was anything greater than a negative 608. So if it would have been negative 600, negative 500, or even a positive number, and then we had a second higher delta number, that would increase the probabilities we're going to bounce. Well, if we look intra-candle real quick, notice these highlighted cells with the dots next to them. Each one of these dots represents an imbalance in the market. And since it's on the left side of the candle, it would represent a sell side imbalance. Now, if your footprint charts do not automatically show you guys where the imbalances are, and in other instances, draw the imbalance zone out for you, then you might want to come over to Affordable Indicators, link in the description box down below, and pick up the Impact Order Flow Indicator, which are the footprint charts that I currently use. If you use code Mike at checkout, it'll ensure you always get the best deal. So as we're looking at this, notice within this candle, we have what's called a stacked sell imbalance. Now, if the sellers are unable to hold price below that area, that is a clue that price could potentially start to move up. Now, we don't have the delta flip right down at this zone, but we do have the sell imbalances, and we do see the market getting above that area. Now, you might say, well, Mike, we can wait all the way up here. Well, yes, we could. All right, this would be a second confirmation. However, if we look at from the zone all the way up here, to me, that's just leaving too much on the table. From the lows of those candles up to the top of this secondary sell imbalance, that's 11 3/4 points. The whole point about trying to use order flow footprint charts is to try to gain an edge, have less risk on the trade. Well, if we look at this same candle, I had that negative 646 delta. I want you guys to pay attention to a very subtle clue. There's actually two clues in this same exact zone. Right here, the gray highlighted area is what's called the point of control. This is the area that had the most amount of contracts traded on it on this entire 1 minute candle. Now, the reason this is important is a lot of times, not always, but a lot of times, this is a clue, not necessarily, hey, I got to buy and get in right now. But this is a very clear sign that when we see the point of control near the bottom of the candle, we want to see, does price continue to go down, or does the next candle start to accept price back above that area? That's one clue that we are getting close to the market trying to bounce. And you couple that with the double bottom area that we have already identified off the 5-minute time frame. Now we're starting to build a narrative that the market could go up. But also, I want you guys to pay attention where that point of control is. Look at the candle body. The candle body is outlined right here in red. This candle right here is essentially this red candle here. And we can clearly see this red candle has a wick below the body of that candle. Now, this is important. Whenever I see the point of control with a gap that separates between the candle body and where the point of control is, that also to me is a potential warning sign that, hold up, maybe buyers are trying to step up here just a bit. And so now we have two things going for us. One, we have the delta at the bottom of a nasty down candle that has a significant amount of delta. Number two, we have a gap between where that delta is and the actual candle body. And then the icing on the cake would be the fact that we start getting above this first stacked imbalance zone. Now, if we actually look at that real quick and we were to map out right from that area down to the low, we can see on the S&P, we would be risking roughly 6 3/4 points. However, come over and look at the 5-minute chart. Where would our potential target be if we were going to be right on this trade? Well, let's go ahead and map out where that target would actually come in. We would actually expect to be able to double from the bottom of that range to the top, giving us a price completion all the way up here, 6610.75. I say, Mike, it says 0.81. The S&P trades in quarter point increments, so I'm always going to round down. So if we go ahead and we look at our entry point and try to play it all the way up to 6610. So now what I'm going to do is I'm going to basically draw a horizontal line right above this stacked sell imbalance zone, so it'll signify where our entry would have been. And we can see that white line is right down here on this chart. And if we look, we could risk 6 3/4 points. And if you're able to make it all the way up here to target, you would be able to capture 62 points. Now, does this trade always work out? No, nothing is guaranteed in trading. But as a trader, we're trying to stack the odds in our favor. What if you took this trade 3 times and only one of those times did the trade work out? Well, let's get out the calculator real quick. If we were risking 6.75, and let's say we took that trade 3 times and we lost, we would lose 20 points. So let's say we took the trade a total of 4 times. 3 of them we lost. 1 of them we make 62 points on. In that example, we go 62 points minus 20.2 1/4 points. And in that example, the trader would still be net positive 41.75 points. And again, I'm not saying you're going to win 1 out of 4 times, 2 out of 4 times, nothing like that. But what I'm trying to set up with this is by using order flow, we can get a better entry into the market with less risk, with the potential for the same amount of gain as if we were just basically trading that double bottom pattern all by itself. Now, if you'd like to learn more about trading stacked imbalances, you want to make sure to check out this next video right here.